Hey everyone, sorry about that. We had to restart the stream here. Something just total collapsed and broken. Who knows? But we are back. We're going to be talking about 5 ways our investors save money. Just wait for everyone to get back here on the stream and we'll get this party started here. And I've got to actually close a door because the kids are home from camp. So let me do that really quick. I just want to wait till everyone gets back here in the chat. I apologize. Hopefully we'll be back here in a second. So I apologize, everyone. We just lost the stream. The whole thing just collapsed. So I had to reboot everything. I apologize. So we were talking. Okay, we got a bunch of people back here. Good. Sorry I had to restart the stream. I'm going to close this door because I got a lot of yelling people in the background. Okay, sorry about that, guys. Okay. Drop me a comment here in the chat. Let me know you guys can see me. Oh, everything's okay at the moment. Here we go. Sorry about that. Reboot. Everything is good. Tyler's here. Thomas is here. Okay. All good, Michael. Thank you. Okay, good. All right. Welcome to the Real Estate Investing Show. I'm Clayton Morris. So glad to have you here. I'm the founder of Morris Invest, which is a full-service rental real estate company where we find, fix, fill, manage great properties with our team in different parts of the country so that you can sit back and literally let the cash flow come in from tenants already in the property. Mostly, almost everything we're doing these days is brand new construction. And so on this show, my goal is to make you a more educated, more well-rounded real estate investor. And if you are coming from different parts of the world where you invest in the stock market or crypto and you're making short-term profits, how can we turn that into long-term profits? How can we preserve that wealth and frankly not pay taxes? And that's where real estate investing comes in. To me, I believe it's the number one store of value. It's the number one way to protect your wealth. It's really the ultimate wealth preservation tool. As the way the tax code in the United States is written and in most parts of the world. So today we're going to talk about 5 ways that our investors save. Now you might think that working with like a full service rental real estate company would be expensive. People always want to know, like, well, what's the catch? How much more am I going to pay to be working with a company like that? But that's not the case at all. So I want to pull the curtain back on this, and I want to talk about 5 reasons why our investors actually pay less money. Number 1, let's start with number 1. How about that's a good place to start? We could have started with 3, but I want to start with number 1. Number 1, we buy in bulk. So this is, I think, the key to really, the keys to the kingdom here. Because if you think of it like Costco, when we buy in bulk, we're able to pass down a large portion of those savings to the client. We buy lumber. Here's a perfect example. I'm sure many of you have been watching what's been going on with the lumber prices over the past few months. Lumber prices hit an all-time high, ridiculous prices in lumber. Well, now they've literally erased all of the 2021 price numbers, and lumber is now back down to where they were. But We buy lumber in bulk and we actually lock in those prices ahead of time in bulk. So these crazy fluctuations in lumber prices didn't have anything to do with us. We literally got to sit back and watch the world dealing with these lumber prices. But because we locked in these lumber prices, because we're building 600 homes in a particular year, we are locked in at a price and bought in bulk ahead of time. So that is how, and we can pass those savings then on to our clients. Where other people who are individually trying to buy and build a house themselves, they had to stop and say, we can't afford it right now. Just the cost of lumber, we can't do that addition on our house, or we can't build that sunroom, or we can't build the house, our dream house right now, because lumber prices are literally double or triple what they were. And we didn't factor that into our numbers. So we can't build the house right now. That's not something we have to deal with. So again, we buy in bulk, we buy lumber, building materials, etc., in large quantities. And then those savings are reflected in the final price tag on the final property. Number 2 on my list, we negotiate great rates with our property management teams. We negotiate great rates with our property management. So if you're used to paying, and I don't want to quote a specific price here because it's different in different markets, but if you invest in a random market, you might not have a lot of great options when it comes to property management companies. And you could get stuck paying extra for their services. But when you work with us at Morris Invest, you're getting an excellent, attentive team at a fair price. In fact, we just published a video behind the scenes with our property management team. It's a really great video. I don't think any other full service company out there has ever, frankly, there aren't really any full service companies out there, but showing what their property management team looks like, taking them through the criteria and how they're actually screening tenants, the whole process on how that works. So check that video out. We'll have a link below in the description for you to go watch that property management video. But very often, you're going to pay a lot less working with us because we're doing so many properties with a particular property management company. So we're actually able to save money on the property management fee, which can be anywhere, 10, 12%. Well, imagine paying less than that because you work with a full service team because they've negotiated those prices ahead of time. These are things you really don't even think about. Number 3 on my list, how you save money, is that we work with over 60 different lenders. And because we have connections with so many lenders, we're going to work to get you the best financial product possible. We had someone earlier who was watching the stream said, hey, what would you do with $100,000? Well, $100,000 is like basically 2 down payments on 2 rental properties. And then working with financing the rest of that. Money is so cheap right now. And for the foreseeable future, these interest rates are going to be at rock bottom prices. How can we create the best possible financial product for our clients? And when we work with 60 different lenders, we're these lenders then are in competition with one another. They want your business. They absolutely want your business. And we're able to provide a great mediary to be able to get you the best possible conventional loan or non-recourse financing. So if maybe your credit isn't the best, actually having a loan that's not tied to your personal credit through non-recourse financing, which is fantastic, especially for our international investors. We have someone watching right now from Denmark. We work with a lot of international investors because you don't have to have an American presence. You can get a non-recourse loan and the bank doesn't care about you, the person, they care about the asset. So that when we work with a lot of international investors, they often wonder, they say, oh, I guess I can't invest in the United States because I don't have an American entity. I don't have all that stuff. It doesn't matter. So we've negotiated these rates and relationships with these lenders to provide non-recourse financing at much lower rates than anybody else can bring to the table. Like if you try to go out and just get a non-recourse loan somewhere, you're going to end up paying like 12, 15%. But because we have long-term relationships and we do hundreds of properties a year with these different lenders, we're able to get way lower prices on interest rates because we work with them and negotiate with them and have a great relationship. And it's the power of having relationships, right? When you work with our team, you have an advocate that's helping you get a great loan and you don't have to worry about a banker taking advantage of you because we're looking out for you through that entire process. Number 4, another way that we save you money is that our market research process is unmatched. Before my other live show this morning, I was talking with my producer, David, and we were talking about homes in different markets. And he mentioned a different market. And he said, are you guys going to build homes in this particular market? I said, no, we'll look at it. But I said, we take over a year to analyze markets, just literally about a year at minimum before we ever move into a market. And so and he said, wow, that's great. He said, I said, yeah, we've literally analyzed the market for a year and said, nope, we're not going there because there was one thing that just bothered us about, and it did not hit our criteria. One of those, actually hit our, and we literally said we can't go into that market because of that particular issue. So this one's incredibly important. When you invest in the right market, you're saving money in multiple ways. That's incredibly important. First, you want to be sure that you can get the highest returns on your investment. So what market is going to produce the highest returns on your investment? The highest ROI, right? But investing in the right markets can actually help you down the road, because a recession-resistant market is going to help you no matter what the economy does in the future. One thing you need to consider now is, well, what does recession resistant look like? Well, you need to have a diversity of jobs, right? So that if one particular big employer in a town, an Amazon distribution center, just decides to close down, and that's everyone works at that place and that's the only job in town, guess what? Then you're going to be off, on the hook for trying to fill up vacant houses. So you want to be able to have all of these opportunities. You want to have low crime. We want to have a diversity of jobs, universities, healthcare, all of them, on and on. And you want to make sure that that the school districts are top notch, and that the state itself is landlord friendly. Does it favor landlords, or is it like New York, which is anti-landlord, or California, which is anti-landlord? So number 5 on our list. We offer ongoing support to help you build a real strategy and help you avoid costly mistakes. So I know this from experience. If you're a DIY investor, there's a lot of throwing things at the wall and hoping something will stick. There are a lot of dumb mistakes that can happen simply because you don't yet have the experience or the knowledge. But when you work with a full service team, we can help you avoid a lot of those headaches and help put together a solid plan to build out a portfolio. And best yet, there's no hidden fees in anything that we do. So when you buy the house, you own the house. That's it. You own the house. And there's no ongoing monthly fee to work with us. Doesn't exist. The property management fee, yes, you will pay a property management company. They will manage your property. But that, of course, comes out of the rent every month. So it's not coming out of your pocket. And your negotiated rental rate is going to be great. And your negotiated property management rate is going to be lower because you're working with a full service team. So those are 5 basic ways that you save money working with us, working with a full service rental real estate company. I'd love to hear your thoughts on this. Drop me a comment below. Any questions, we'll follow up. We read all of the comments here on the channel, and we're happy to answer all of them for you. I'd love to open it up for some Q&A. Any questions you guys have right now? Teppy is here. Melody is here. Yeah, as Nicole points out, appreciation in the right market builds that internal rate of return. Absolutely does. So that internal rate of return is incredibly important. The IRR. It's not just about ROI or a cash on cash return, but what is the internal rate of return? Because if you're using somebody else's money, you're using a bank's money, then of course you're able to accelerate and build that portfolio in a much stronger way. And you're doing it on the back of someone else's money. I mean, that's how you can't beat that. Yeah, Tyler. So we only really do new construction. Sheba, yeah, absolutely. You can come see the house. We have a waiting list though for our properties. So what I would encourage you to do is, book a call with our team. If you want to fly down and meet our team, walk the neighborhood. You can see all of our new construction. You can see what it looks like. You can meet the property management team. Absolutely. If you want to do that. What is the average price? Well, there's no average. I mean, we literally, the minimum is going to be about 100,000 is going to be like the right around the bottom of what we do on up into the three, and even into the 400s. Brand new construction. We have full videos here on the channel walk you through some of the new construction. So just watch some of those videos. You can see me personally walking through some of our finished and stuff that's in the process of being built, walking through that process. Yes, we have properties in Texas, Teppy. What are some good ways to find money for a down payment? Well, first of all, there's a lot of people don't realize that they have untapped potential in some of their retirement plans. So, I don't know if you know that, but you can borrow from your 401k, not withdraw, but borrow from it. That's how I bought one of my first rental properties, is borrowing from my 401k. So you're basically taking money out of, you're borrowing from your own money. And the best part is you actually pay it back to yourself through payroll. And now that money is not locked up in a 401k. You can actually take that and use that as a down payment. So I had Fidelity as my 401k provider. You go right onto their website. I think it was like my401k.com or whatever it was. And you just go in and you click on borrow and a loan to yourself. And you'd want to take the maximum amount that you're allowed to in that calendar year. So I took 50,000 out and I was able to buy my first rental property with that. You could also, there's plenty of other, think about it. You might have an IRA that's just been sitting there. Maybe you left a job and you have like an old IRA that's just like sitting there. Well, did you know that you could set up a self-directed IRA and use that money in a self-directed IRA to buy a property inside of a self-directed IRA, and it can grow tax-free, so that all of that rental real estate income that you're getting from tenants grows inside of that self-directed account, tax-free, so that 59 and a half years old at retirement, all of that is tax-free. Phenomenal. Those are just some ways. Thomas, yes, it would. Fund and Grow would be a good down payment option as long as you have a good... We're not backlogged, Barry. I'm sorry, Thomas, let me answer that question first. As long as you have a good exit strategy for paying that back, it's absolutely great to be able to jump on a property using Fund and Grow. I have. But knowing that in 18 months, that's going to go at 0% interest, it's going to jump up to 18% or whatever. So just be careful about that. You can definitely roll it again into another year, and another year. They can help you at Fund and Grow roll it to zero interest rates from year to year. But just be careful with that. Barry says, how backlogged are you? So we're not backlogged. It's that we build in stages. So if you book a call with us, we can start to have a discussion with you and understand what your goals are. We operate on the phone. Our company, we want to get to know you. It's part of our philosophy is we're not just, hey, go on the internet and buy a house. Like we want to actually get on the phone and develop a relationship with you. We want to know what your goals are. So where do you want to be in 5 years? And how can we help you get there and we can walk you through all sort of untapped ways that you might not realize you have access to and help build a solid plan for you, Barry. So schedule a call with us and then we can get you into the pipeline finding the right property that would be a fit for you, whether it's a duplex or a single family, what price range, and we can build out a plan in that way. We can start talking about the financing that we can get in place for you with the different lenders, and all of those things will help, we can kind of front load the process. Let's see. Alexis says, I'm buying 4 houses today. If 100 can buy 2 houses. Yeah, Alexis, that's exactly right. Like if you book a call with us, 100, because our minimum down payment on our properties is going to be roughly in the $40,000-$45,000 range. That's about the minimum. So yeah, that's exactly the way to go. Like I said, we're but we're building about 600 homes this year in 2021. Oh, Jason, another great question. So Jason says, if I had a 350 in equity in my house, would I be better off selling that? And how many properties can I buy with that in my bank through your company? Well, I would book a call with our team and we can talk with that strategy. I mean, you might be better off like doing a home equity line of credit unless you want to sell, like you want to sell the home, like you don't want to live in the home anymore. That's one thing. Or take the equity, borrow from your home, use a home equity line of credit. Now home equity line of credit is one of my favorite ways of investing because you're living in a home and you cannot eat your equity, right? Like you're living in a home and you've got a lot of equity in this home that you're living in. Well, what are you doing with it? You're not doing anything with it. That equity is just sitting there, not doing anything for you. And the bank is willing to give you a home equity line of credit that you can use to go out and buy investment property, investment real estate. So a bank is saying, hey, we value your asset. We're going to give you a line of credit where you can go out and buy other assets. No brainer. No brainer. I bought a lot of rental properties using a home equity line of credit. Again, you cannot eat equity. So you're just sitting on a gold mine of an opportunity. Rodrigo, can you offer the service for non-U.S. residents? Yes, absolutely. Like I was talking about before, if you maybe tuned in a little late, we have what's known as non-recourse financing that we work with our lenders. So they don't care where in the world you live. With non-recourse financing, they are literally backing the asset itself because it's such a great asset. So they are taking out a loan. They don't care that you live in, Mexico or Canada or wherever. Doesn't matter. They are backing the asset and they're giving you a loan. And again, it's not tied to you personally. It's not even tied to your personal name. You can buy it, you buy it in an LLC. And with conventional financing, if you go that route and you live in the US, conventional financing, buy it in your own name and then transfer it to an LLC a short time later. Very, very easy to do. And we have an international program specifically for our international investors. And Leah, yes. So we have vetted property managers that will manage the properties. So you don't have to manage the property at all. All you have to do is pay property taxes, once a year or whatever quarter you have to pay property taxes, and do your taxes with your accountant. And you collect cash flow month after month. I hope that helps, guys. So let me show you the website just in case you missed that. So here's where you go. So if you'd like to book a call with us, just come over to Morris Invest right here on this screen, just morrisinvest.com. See up here in the URL bar, morrisinvest.com. And then right here on my ugly mug, right here is a book a call button. Just click on that and it'll open a screen where you pick the time, where it'll know what time zone you're in, just confirming your time zone, right? So if you're on Eastern time and then you click continue, and then you pick a 30-minute time slot on your calendar. Make sure you put in your phone number correctly and your email address correctly. You'll get an email confirmation, and then one of our team members will call you at that time and start having a dialogue about your goals. And once you book a call, you'll actually have a download. There'll be a PDF download that you'll get as well. So go into your email and get that download. And it's a purpose-driven goals sheet that we want you to go through and kind of fill out before our phone call. So that way you're ready. We also want you to do our Freedom Number cheat sheet. They're all very short, but it really helps us understand what your goal is. And it'll really help you understand our process and really look at your expenses on a piece of paper. And so it's really helpful before our phone call for you to fill out that information. It'll take you a few minutes. Just sit down with your husband, wife, partner, whatever, by yourself, and just fill that out. And it'll help you figure out, like, what is your freedom number? Like, how many homes do you need to get to be financially free? So that every month you're bringing in, $5,000 a month in cash flow from your rental properties, $6,000, $7,000 a month in cash flow. Does that hit your personal safety net? So we look forward to talking with you. Yes, Leah, I would just schedule a call with us. That's the best thing to do, Leah, and we'll walk you through the process and we can see what works for you. Because you might be in a different category with us, meaning that you you might be one of our cost segregation clients where we're able to provide a cost segregation on the property. Therefore, then you're able to hand that to your CPA and basically pay nothing in taxes. So we have different programs and based on what you want to do. So Leah, I would just book a call with us, okay? And Roy, yeah, exactly. Do you get your down payment back when you do your taxes the following year? In many cases, yes, because the down payment basically, if as a write-off and the depreciation on that property, and because it's new construction, in many cases, you're going to get that down payment back on the taxes. So it ends up becoming like free money. You're getting like basically an infinite return because of tax breaks. And our whole team, our team will help you with all of that. So you don't have to be a tax expert. Our team is, and will handle that for you. Rose, the average monthly income from one property. Nicole, what would you say? I mean, I would say it ranges. It really depends on the price. Like we have some of our duplexes will cash flow about $33,200 a month with both sides being rented. On up from there, we actually, rents have gone up. So $3,400 a month. And then there's more, even ones that go above that. And then there's some that are lower than that, where you're at, $1,000 a month in cash flow from a property. Just depends. So thank you, everyone. Thank you for bearing with me here while we had to restart the stream. Technology sometimes, gets the best of us. But my thanks to all of you for joining. Again, book a call with our team. We'd love to talk with you. And any questions you have here, drop them in the chat below, in the comments. We will be answering questions live here even after we end the stream. So any other questions you have, just drop them in the comments below this stream, in the comments field, and we will answer them live for the next hour as well. So much love to all of you guys. We will talk to you soon. We'll see you next week for our next live stream, everyone.